What's up, everybody? Just give us 1 minute. We'll be starting very, very shortly. But happy Monday, January 9th, 2023. Hope you all are doing well. Lots to talk about tonight. I do apologize for being late. About 9:04, so I'm sorry. I totally lost track of time. Been very busy today, but a lot of good things are in the works. So that is positive news. Now, tomorrow is going to be a very busy day. We are going to be hearing from the Federal Reserve. Fed Chairman Jerome Powell will be speaking tomorrow. Then the CPI report will come out on Thursday. The banks will be reporting earnings on Friday. So there's going to be a lot of event-driven trades. This week. We'll talk about it, but I think the highlight of the week is not only going to be the CPI report, but we really have to pay attention to the speech by Fed Chairman Jerome Powell. Now, I want to quickly talk about the major equity indices. So let's do that really quick before we head out into the bitter cold New York City. It's freezing tonight. Anyway, markets actually rallied throughout the day, but we closed pretty egregiously, really horrible. And that 50-day moving average is acting as a resistance. So the S&P 500 was actually up over 50 points. We faded throughout the entire day. If you look at the futures contract on the E-minis, ticker symbol ES, we're down about 3 points, so I would consider that flat. If you look at the Dow 30, we are trading above the 50-day moving average, but we had this pretty big reversal candle today. Futures are down 20 points. Not a big deal. If we look at the NASDAQ 100 futures, ticker symbol NQ, the NASDAQ ripped today, but right about 2 o'clock, did everybody notice that massive reversal? So even though we did close, if we pull up let me pull up the NDX, the NASDAQ 100. Even though you may say, hey, we closed almost up 1%. If you look at the NDX, which is the NASDAQ 100, we did close up about 68 points, but it was a horrible reversal candle, and we closed almost at the dead low of the day. And I think that's a lot of traders front running what we're going to be hearing tomorrow from the Fed, but we'll talk about that. Let me take a quick check at crude oil. CL, crude futures, trading at $74. Let's look at the Dixie. I think the Dixie came down quite a bit today too. Yeah, 103. Trading at 103 on the Dixie. 10-year U.S. Treasury yield, U.S. 10-year, what do we got? Yeah, lower. 10-year U.S. Treasury yield lower again today, 3.523%. Team, let's head downstairs. I'll say hello to all of you in the chat. I see my friend TC, Mac Lover, Gary Carpenter, Sunshine After Rain, good to see you. Dr. Longus, Mike Hansen, welcome. Thank you for being here. Gigi NYC, John Sorley, Brick Stonewall, Stephanie, Renee, EBITDA, Mohammed, Smee Media, ETC333, thank you so much. Nina, Friendship Lights, GM, Evan Weeks. Welcome to New York. Welcome to Billionaires Row. We were on 57th Street. Let me get my backpack. We'll lock up the office and we'll head downstairs. I think someone's in the office. We gotta be quiet. Give me a minute. I'll see you guys downstairs. Alrighty, team, we are headed downstairs. Let me, Dan Zhang, what's up? All right, team, welcome to Billionaires Row. We are standing here on the corner of 6th and a half Avenue and 57th Street, right across the street from 157. This is actually the original building on Billionaires Row that kicked off the entire trend. Then the newest addition of Billionaires Row is Central Park Tower, which is actually built and developed by the same company, the Extel Group. But everybody, hopefully you all are having a fantastic day. I see Dr. Longus, Hawaii is here. Brian says, where are we going to, Tom? I think we're going to go to the Upper West Side of Manhattan tonight. Very quiet day, very cold night out too. But let's do this. What do you guys think? Let's head up to Lincoln Center. We'll check it out. Then we're gonna head all the way up to the Dakota again. Man, look at this shot. You have 220 Central Park South, and you have an awesome view of Central Park Tower. Mike says, you're slowly making me love your city. Mike, that is the goal. Thank you so much, Mike, for being here. I appreciate it. Susanna Q4 is here. Welcome. Cypress Hill says, greetings, Tom, from Poland. Welcome to all of our Polish viewers. We love you guys. Thanks for being here. Somebody says, do I recommend... Oh, let me turn up the brightness on my screen. I can barely see. I have the auto brightness on. Sunshine after rain. Welcome, Mets fan. This is Fed Chair Powell is a dangerous man. Yeah, he's pretty dangerous. Speaking of him, he is going to be speaking tomorrow. Fed Chair Jerome Powell is going to be speaking tomorrow. I do have a couple predictions. For all of you. And I think that may have been why the markets had a really, really nasty reversal. But somebody says, do I recommend using Robinhood? No, I don't. I never, ever recommend using Robinhood. I think they are a horrible company. So no, I don't. I wouldn't recommend using any of the discount broker dealers, such as, oh, look at this. 2 dog faces on the 7th Avenue sign here. I would never recommend using Robinhood or Webull or any of the other discount broker dealers. I just think they're very, very horrible institutions, and I think they promote negative investing habits. 7th Avenue, if you take this street all the way down, you'll run right into 42nd Street, Times Square. Now, you could actually kind of see the ball that they dropped on New Year's Eve all the way in the distance there. It kind of looks pretty cool. Let's see here. BB Choice is, what's your prediction? More hawkish comments from Powell. Yeah, so let's jump right into that, because I do apologize, everybody. We are starting late. It's already 9 o'clock. I completely lost track of time. It was a busy day for me today, but it was a very good day. Things are starting to move along here. More to fill you guys in on that, hopefully within the next couple weeks. But yeah, so Federal Reserve Chairman Jerome Powell will be speaking tomorrow, and I think he is going to blow a very, very much needed dose of reality back into the market, in my opinion. Now, this doesn't mean that this is going to happen. This is just my personal opinion. So anything I say from this point on doesn't mean it's going to happen. It could be completely the opposite of what happens. But if I had to guess, I think Fed Chair Jerome Powell is going to come off very, very hawkish, and I'll tell you why. Now, let's think all the way back to the non-farm payroll report that we went over on Friday. Does everybody remember that when we got the non-farm payrolls? Now, it was a massive, massive beat. I think by like 83,000 jobs. Massive beat. Brooklyn Diner here, right outside of Central Park Tower. But even more so than that, what I'm really keying in on was the unemployment rate. And the unemployment rate in the United States actually declined from 3.7% to 3.5%. Now, if you've been watching Walks on Wall Street, we not only talk about Fed Chair Jerome Powell, but we talk about multiple other different Fed presidents from the different branches of the Federal Reserve, and almost all of them, even the most dovish Fed presidents in nature, whenever they speak, they come out and say something along the lines of this. Here's the front view, the main view of Central Park Tower. They say, we will not consider a pivot or cutting interest rates or halting the rate increases unless we have at least 5% unemployment in the United States. Now, the New York Fed president goes by the name of John Williams. Last month was doing a speaking event at the New York Economic Club, and he said exactly that. He said, we don't see as a collective here at the Federal Reserve a path to easing, right? So right now we are in a very, very aggressive quantitative tightening, I would say, environment, right? We are coming off the back of 4 consecutive 75 basis point rate hikes. Then most recently and most notably, we got a 50 basis point rate hike. Now, February 1st is the next FOMC meeting when we will get the next monetary policy decision, and consensus on Wall Street is for about a 50 basis point rate hike with a 25% probability we may get a 25 basis point rate hike, assuming the CPI number that's going to come out on Thursday comes in better than expected. Now, even though it may come in better than expected, I do not think there's a possibility for us to get a 25 basis point rate hike. Maybe a slight possibility, but I think the Fed is going to go a solid 50. Really quick, this is 157. And inside 157 is also a very famous 5-star luxury hotel called the Park Hyatt. And that building and this building is developed by the same company called the Extel Group. Vinny Castellano is here. What's up, Vinny? Thank you so much for joining us. Hopefully your move is going well. Will M, what's up? Hopefully you're well. Herman says, hello, saludos from Chile. Welcome everybody from Chile. CM says, Tom, the streets look very empty. They do look empty. And today, Midtown Manhattan was very, very empty. Now, if anybody remembers the conversation that we had last night on the live stream, we talked about a very good article that came out in the Wall Street Journal talking about the MTA, but not exclusively to the MTA in New York City, other mass transits, organizations throughout the United States, saying that ridership is down. And in the article, we're looking at the Trump International Hotel and Tower, by the way. In the article, it stated that in Manhattan, in New York City, on Mondays and Fridays, public transportation has really, really suffered drastic declines. So the MTA is thinking about cutting service on Monday and Fridays, which I think is actually a pretty good idea. Hey, Shadow Ship is here. Says, hey, Walks from Wall Street, good to see you. Welcome, Shadow Ship. Thanks for joining us. Abdullah, welcome. E. Smith says, agree, Fed is going 50 basis points. However, they will realize they went too far and will need to pause, says E. Smith. Good comment there. Well, if we look back throughout history, to E. Smith's point, we're going to walk up Broadway, just for the record. The Federal Reserve always tends to overdo it. They always tend to overdo it, not only in quantitative tightening, but QE as well. They always tend to overshoot to the upside, and they always tend to overshoot to the downside in every single economic cycle. If you look all the way in the distance, we have the beautiful 432 Park Avenue building, which we actually visited last night. It's a really cold night out in New York. Now, it's not like in the 20s, but you know, we're coming off a couple days here, guys, of 50 and 60 degree weather, and I'm cold. I'm cold tonight. I gotta start walking a little bit faster. Matthew M is here, says, what's up? Good to see you. Dr. Longus says, I agree, Tom. Seems like a good idea. Welcome, welcome. But think about every single economic cycle. The Federal Reserve always tends to overcook things to the upside, which in most recent history, look at 2021, just ridiculous. If you want to talk about irrational exuberance, I mean, that was like textbook. That is going to be studied at Columbia Business School, Harvard Business School, NYU Stern for years, about textbook irrational exuberance, liquidity, how liquidity impacts markets. That cycle that we just went through, not only on the monetary policy side, by the way. Now, I want to expand on that thought for a moment because, and it's going to sound like I'm defending Fed Chair Jerome Powell, but just hear me out. A lot of people claim and try to shift all of the blame onto the Federal Reserve. And I'm one of the first people to criticize the Fed. But the fiscal side of the house has been equally as egregious. Would we agree? Hold that thought. This right here, my friends, is Columbus Circle, 59th Street. You can get the subway right here. This is the one train entrance. But this building used to be called the Time Warner Centers, but it is now the Deutsche Bank Towers. And if you remember from our live streams in Lower Manhattan on Wall Street, the main German investment bank, the bulge bracket bank, Deutsche Bank, used to have a location right there. It is now vacant. They have migrated uptown, pretty much like every other single investment bank and hedge fund. And they are located right there, taking over the Time Warner Center. Now, on the right side of the building, maybe this is a little bit better view. The right tower with all the lights on is actually a very famous hotel. It is called the Mandarin Oriental Hotel, which we always walk past on our Miami streams. That is located in Brickell Key. Hey, Spirited says, hey, Tom, are you going towards Times Square? Maybe we will be a little bit later tonight, but I think we're going to continue to walk uptown, 66th Street, Lincoln Center. We also have a pretty nice looking moon out here. Now, this is Central Park South, and we have the camera pointed east. Yeah, Joe Driver, we may have to do that. We definitely may have to do that. Abdullah, welcome. Good to see you. Edward Adams. Okay, now that we got the light, let's cross. Usually it gets a little bit windy here. This is one of the worst wind tunnels in the entire city. But this is my favorite place to be during the summer. You cannot beat Columbus Circle, 59th Street during the summer because this fountain is going. There's tons of people hanging out. This is one of the main entrances to Central Park. It's a really, really beautiful place. You have all of the luxury buildings on Central Park South. You have a beautiful skyline at Billionaires Row. I mean, you cannot beat 59th Street, Columbus Circle, especially in the summer. TC says, how How late is too late to walk Times Square? Well, I try not to go there to begin with, but around the holidays, around obviously like New Year's Eve, we try to go there just to show the viewers the area. But I just rather not go there at all. It's just too much. I got to build up the mental fortitude to do that. I'm not sure if I have that much tonight, but we'll see. Maybe we'll do it. Right here, you're looking at the Trump International Hotel and Tower. Now, I always butcher the name of this restaurant. Jean George's or Jean, something like that. Anyway, it's a really, really good steakhouse. And if you remember from last night's live stream, we were talking about commercial real estate in New York City, and there's a beautiful brand new office building that is going up on Park Avenue. It is called 425 Park. Citadel Securities, the hedge fund, and the market maker have offices there. Ken Griffin will be there as well. And they also have that restaurant. There's going to be another location opening right there on Park Avenue. Going to be pretty cool. Hey, Hawaii is here. What's up? Good to see you. Thanks for joining us. Aloha to you. Trust you're well. Let me give you guys a quick sneak peek into Central Park. Now, if you join us for our live streams in the spring and in the summer, we actually tend to walk through Central Park a lot because it is light out, but obviously during the winter it gets so dark too early that there's really nothing to see too much in Central Park, but I love Central Park. This place is phenomenal. Ren 1018 says, Tom, I watched the Madoff documentary because everybody was talking about it yesterday. Tom, you would like it. Yeah, that was a good conversation yesterday, wasn't it? Now, I haven't yet signed up or subscribed to Netflix, but now that everybody's talking about it, I think I'm going to do that first thing I get back to the office. Really quick hack here. This is actually a public restroom. Not a lot of people know about it. So if you're looking for a public restroom around 59th Street, Columbus Circle, there's one actually right inside Central Park. This door right here is the residences. So for people who own units on the right side of the building, you could actually rent and own your individual condominiums. The center door is for the hotel, which you could actually purchase a hotel room, which is kind of interesting. And you could rent the hotel room out while you're not there. So I was actually doing some analysis on those deals, and they're not good deals, actually. Right? Not to sort of take a shot at it, but they don't cash flow almost never because the monthly maintenance is so high. The monthly maintenance is like $5,000 for just one of the hotel rooms. And even though the hotel rooms rent out for $750 to $1,000 a night, it still doesn't cover the cost of the unit. And I was looking at some of the comp sheets, because if you're interested in a unit, they'll send you, the financials of the unit. And I was looking at some of them, and the vast majority of the people who own the individual hotel rooms, they never even stay there, like one night a year. So it really tells you that most of it is just, to park your cash, like big money owns those units. We got to take a little bit of a break. I got to tie my shoe. While I'm tying my shoe, you could have a beautiful view of 15 Central Park West. Stand by, hold on. Okay, we are good. Hey, Dusty Cole is here, SME Media. Welcome. 15 Central Park West, we've been by here many times. I believe the former CEO of Wall Street mega bank, Goldman Sachs, has a unit in this building. Very, very beautiful. It's one of the most expensive buildings in the entire city. Taxi cab says, hey Tom, can you please head over to 72nd Street Station? That is actually where we are headed to tonight. We're going to make a quick pit stop at Lincoln Center. I kind of like how quiet it is. Not a lot of people on the streets tonight. It is a Monday. A lot of the tourists have gone back for The holiday season is over now, and the city's going to be very quiet. The city's going to quiet down. Now, I have a question. I think it'd be interesting to get some feedback from the chat, because today, obviously, on the open, I was watching the open very, very carefully, and major equity indices actually took off. This is West Elm. This is a very, very expensive furniture store. I was actually looking at a couch in here just for fun. The couches are thousands of dollars. It's ridiculous. I still buy my furniture off of IKEA. Sometimes you can't even tell the difference. Anyway, now, we had a pretty strong open, but I was very, very skeptical of it. And we were talking about this last night on our Markets Look Ahead live stream. Now, the markets seem to be very giddy and excited about this very, very strong non-farm payroll report, right? Payrolls really blew it out of the water. The unemployment rate actually dipped down and dropped. I don't know what that taxi cab is doing, but in the long term, one of the main drivers of the market, as we've been reviewing, what really drives price is liquidity. And one of the main providers of that liquidity in the market is the Federal Reserve. And we are in a pretty steep risk-off environment here. And I think these big pops in the market where everybody gets excited, in bear markets, especially if the major equity indices are living below the 50 and 200 day, a lot of these moves are faded. Now, I don't know, maybe we could have a different reaction tomorrow, but I really think Fed Chair Jerome Powell is going to be very aggressive here in reminding market participants what the end goal is. Now, if I want to play devil's advocate, there were actually some positive things in the non-farm payroll report as it relates to inflationary pressures. And that has to do with wage growth. Wage growth was actually coming down as we had a huge beat in employment numbers. So I think it was like 80,000 or so over expectations. But one of the main things that the Fed looks for is wage growth that drives inflation. You could see Lincoln Center in the background here. And wage growth actually cooled a little bit, which may push the Fed to take a little bit of a back seat. However, where I'm very, very concerned as it relates to, if you're going to predict a pivot, is that the unemployment rate went in the opposite direction of what the Fed wants. They've been very steadfast and very clear that they want to see unemployment around 5%. So do you guys think, let's say this, let me rephrase the question like this. What do we think the tone is going to be at tomorrow's speech? Do we think Fed Chair Jerome Powell is going to come out very, very hawkish? Or do you think he's going to acknowledge the good, sort of process all of that data and say, look, maybe we could have an environment where we only raise by 25 basis points on February 1st, because yes, even though the non-farm payrolls came in above expectations, even though we had unemployment rate drop, it seems as if the forward or the leading economic indicators as it relates to inflation are coming down. Now, if they do that, you could see a pretty big move in this market to the upside, and that's exactly what the Fed is trying to cap. They're trying to, number one, put the inflation genie back into the bottle, but number two, sort of calm the irrational exuberance. Oh, Michael Joseph says, Tom, the tone will be the same as last time. Still a ways to go, but making progress. Brian says, hawkish, since stats like unemployment rate are not what they are looking for. Ratfink says, I think 50 basis points to keep pushing back on inflation. E. Smith says he will come out hawkish due to employment picture and inflation is still way too high. Now, here's something else that's interesting. And I was having a conversation with my friend about this. if you really think about it, yes, one of the tools that the Fed has to try to lower inflation is raising rates, but that's really not what does it, right? What does it is trying to put a cap on the money supply. So there's no real guarantee that raising rates is going to solve the inflation problem. It's just it may kill the demand problem. But I think until the supply chains are fully healed, which it actually looks like they are healing. We talked about this last night when we heard from Foxconn. They said that now that China has essentially reneged on their zero COVID policy, that China has reneged on their zero COVID policy, their main Foxconn plant in China is actually running at almost 100% capacity. Hey, Patricia Ivory is here. Says, hello, Tom. What's up, Patricia? Thank you for joining. John T. Connors is hawkish. He keeps saying he is data dependent. True. Rat Fink. Zach Druce is accidentally dovish again. Wendy Inglis' Bank of Canada is announcing January 25th. It looks like we're all consensus here in the chat. Dan Zhang. This is a really nice view. Hey, Ann Gibson says, hey, Tom, joining from Midtown Manhattan. Hey, Ann, thanks for joining. Dan Zhang says, Tom, have you seen Alibaba's share price spike because Jack Ma has given up control of Ant Group, which is the company that got him in trouble with the Chinese government? Yeah, well, Alibaba has been acting very well. And China in general has been acting very well, to your point. Now, I'm not sure if you guys saw this on Twitter, but I commented on somebody's Twitter post that said, what are some of the sectors that are leading in the overall market? And I commented 3 things. Number one sector that is leading, right? And what I define leading is stocks acting well, above their 50-day moving average, above their 200-day moving average, trading near 52-week highs, right? And exceptional sales and earnings growth. What is this thing? Is it like a gold piece? Let's try to get closer to that. Sorry, I have a horrible attention span. I was cooped up in the office all day. But here's what I said. I said biotech is number one. Definitely the number one leader so far. Number 2 is China in general. Now, if you look at the Hang Seng Index right now, we are very, very far overextended from the 50-day moving average and the 200. However, I will say this. If you go back throughout history, when bull markets start, right, you'll usually have an overwhelming force off the bottom where you have the indices in general ripping above all their major moving averages and tons of stocks breaking out. And that's exactly the kind of behavior we're seeing in China. Look at Alibaba, look at JD, look at Pinduoduo, look at Baidu. All of these are raging off the bottom. So I wouldn't be surprised to sort of see some consolidation, maybe, an 8 to 7% pullback to the moving averages. And I think we may be in a new bull market in China. Now, and additionally to Dan Zhang's point, as we're coming up on the beautiful Lincoln Center fountain, listen to this. It's really, really nice. Now, here's another thing. I understand all the risks that investing in China comes with, right? And we've been talking about this for a while. Can we trust the earnings? is the financial reporting accurate? Is it fraudulent? I get that, and trust me, I understand it. I used to have a very big position in Alibaba, but it's very difficult to argue with price. And I posted this on my Twitter. I said, you could argue with your wife, you could argue with your husband, you could argue with your parents, you could argue with your professors and your teachers and your coworkers. The only thing you're forbidden to do is argue with price. You can do whatever you want, argue with me on Walks on Wall Street, call me whatever you want, but you can't argue with price. And these stocks are acting well in a good environment where almost everybody on the street, and some very respected fund managers too, that I respect and I have studied throughout my career, are saying things publicly like China is uninvestable, the CCP is going to be the demise of China, and they may be right? But at the end of the day, look at the volume that's pouring into these stocks. Those aren't people like me. Those aren't, somebody trading a one lot in their basement. These are big players that see something brewing in China. So that's sort of what I'll say there. Hey, Joseph Hardaway, what's up? Welcome, Joseph. We are now headed uptown. Let me show you guys the subway, actually. This is the 66th Street station at Lincoln Center. This is the downtown one passageway. But you could actually walk down and around to get to the uptown in the Bronx. Yeah, Joan Case is a very peaceful area. Good to see you. RG Jones says hello, everybody. Good to see you, my friend. Welcome. We are going to head to 72nd Street tonight and take a look at the Dakota Apartments. That is where the famous John Lennon unfortunately passed away. Bill Rollins is here, says hello. Hey, Bill. Welcome. Hey, Toby Sanchez says hello, Tom, and good evening. Welcome, Tony. A Ham says, dude, 73% of inflation is linked directly to corporate greed. I respectfully, strongly disagree with that, A Ham, but if you have any data to back that up, I would definitely be interested in reading that and looking at it. But I will respectfully disagree, but I appreciate the comment. But if you have any data to support that, share it in the chat. I'd like to see it. I'm open to hearing about it. Hope you're having a good Monday. Jim I says, good evening. Welcome, Jim. I see Austin City Limits. All right, let's cross here. Now, here's one of the things, just to quickly wrap up our Fed conversation, because obviously for those of you who are joining, Fed Chair Jerome Powell will be speaking tomorrow. We know that. But here's what I wish would have happened. I wish the speech was scheduled for Friday. Don't you guys kind of wish that? I really wish that this speech was scheduled for Friday. And that is because we're getting the CPI report out on Thursday. And could you imagine if we get a better than expected reading in the CPI, or it comes in line with consensus, we could get a better update on the Fed's thoughts and viewpoints on it. Now, the Tisch WNET Studios, I thought this was CUNY. For some reason, I thought that the City University in New York also uses this studio, because I had a friend back in college who did communications, like a communications major, and she would film like CUNY updates in there. But isn't Tisch an NYU thing? I thought Tisch was NYU, maybe. Maybe somebody in the chat knows. Jay Sully says, Tom, if greed is not tied to inflation, then what is the underlying cause in your opinion? I say greed, planned supply chain issues. No reason eggs should be $5 for a dozen. That's a good point. Here, let me just cross these construction guys, because that smell is brutal. Does anybody, I'm sure you guys know the smell of freshly poured, what is that, asphalt? That is a brutal smell if you're not used to it. Definitely knocking off some of the brain cells. God bless those guys who deal with that every day. But in my view, inflation is directly correlated and directly linked to a massive, massive move in the money supply. So essentially what happened is, and it's a good conversation to have, this is where they shoot the news, ABC 7, but essentially what happened during COVID was the following. The government, and I don't want to get into an argument whether it was right or wrong, that doesn't really matter here in this context, but essentially what happened is governments, not just the United States, but all over the world, forced their people to lock down and stay home, right? You had a massive, massive, all but short spike in unemployment, massive. People lost their jobs. And in order to support people, governments, specifically in the United States, started to print money to, number one, the Federal Reserve started to print money to provide liquidity to the markets so the markets wouldn't freeze up. And then we had massive, massive fiscal stimulus packages too. So not to be confused with monetary policy and fiscal policy. Monetary policy is controlled by the Federal Reserve. Fiscal policy is controlled by our politicians. I was about to say something mean, but I shouldn't. Essentially, you had massive money printing. And if you print so much money, you cannot expect to have no inflationary ramifications. Now, to touch on your point about, let's just say the corporate greed point, okay? Think back to just basic economics 101, supply and demand, right? Goods and services. People, me, you, everybody, we buy goods and services. However, during the pandemic, we told everybody to stay home. So nobody was in the factories, nobody was at work actually producing tangible physical goods and services. But you had an ample supply of liquidity, an ample supply of money for everybody to sit home on the couch and purchase goods and services that weren't even being made. So you had all of this massive amount of money chasing too few goods causes inflation, coupled with supply chain issues, pretty much due to the fact that nobody was actually going to work to produce these goods and services. And you have that massive inflationary boom and push, okay? Now, it's interesting because if you look way before COVID, right? Let's think back all the way pre-2019. Does anybody remember, right? And I'm sure there's a lot of people who follow the markets. It's almost as if anytime a CPI number came out, it was like a non-issue. Nobody looked at it. Does anybody remember those days? Notice the beautiful fire escapes here as we head to deeper into the Upper West Side. Beautiful, beautiful neighborhood. Now, it was almost as if like the CPI report didn't even matter because inflation was actually running below the Fed's target. The Federal Reserve would actually come out and say, I think we should have a little bit more inflation, right? So to play devil's advocate to your point, you would say, well, Tom, hasn't the money supply been expanding forever? Haven't we been in 14 years of quantitative easing? Haven't we held interest rates artificially low for 14 years? How come we didn't have inflation back then? And you're right. I think the reason why we had such egregious inflation is because of the velocity and the aggressiveness of the fiscal stimulus and the velocity and the aggressiveness of the monetary stimulus, coupled with the fact that nobody was going to work to produce these goods and services. So you had bidding wars for too few goods. Look what happened in the housing market. We had no supply and everybody wanted to buy a house in the suburbs to get out of major cities. Look at vehicles, right? We had a huge bubble in the auto market that's deflating. And now that the Fed is starting to try to unwind and suck all that liquidity back out of the market, you're starting to see deflation in asset prices, in equities, in the real estate market, which is just starting to come down now. But it's a good point. Rat thinks, I think Amazon was a big recipient of the stimulus. Well, all of corporate America was, because what did people do with the money? Well, number one of the things they did is they gambled with it in the stock market, but number two, they bought stuff online. Here we have Corcoran. This is Barbara Corcoran's real estate brokerage. Let's take a look at some of the prices. Hey, Mighty Mole, what's up? Good to see you. What's up, Mighty Mole? Check this out. 125 East 74th Street. It's a co-op, two bedrooms, 2 bathrooms, 1.75 million. What do you guys think? Thumbs up, thumbs down on that one. 322 West 57th Street, we were just there. Midtown condo, 4 bedrooms, 3.5 bathrooms, 6.295 million. Check out the real estate taxes a month. Your monthly real estate taxes are $5,214 for your real estate taxes per month. Think about that. Crazy. City's expensive. Now, I'll put that in perspective. My mortgage, think about this for a moment. My mortgage with all the taxes, all the insurance, and my water bill, my garbage bill, my electricity bill is less, way less, than just the monthly taxes on that one unit. Let that sit in. Let that settle in for a moment. Man, some people are very, very wealthy in this city, my friends.
Very good.
Okay, let's push on further up. I know Rat thinks is wow, crazy. Susanna Q forces prices from another world. Now, here's something interesting. I'm not sure if many of you knew this, but if you go to buy anything in Manhattan that's over $1 million, do you know you have to pay something that's called a mansion tax? Did anybody know that? So not only are you paying all of that just to move in someplace, but before you move in, before you even turn the lights on, you have to pay a mansion tax for any property over $1 million. And to buy something in Manhattan, in all fairness, if you're looking at something for $1 million, it's probably nowhere close to being a mansion. Crazy, right? Hey, Toby Sanchez. Hello, Tom. How is your Monday coming along? Today was a very good day for me. Very good day. I got a lot of stuff done. Things are moving along, and I'm excited. I'm fired up, and I'm happy to be here with all of you. 72nd Street now on Columbus Avenue, everybody. We're going to be making a right and headed down to one of the most beautiful buildings in the world. Okay. Dakota apartment. Dakota. The Dakota. Beautiful. Steph UH is his wealth in Miami, approaching that in New York City. You know, I think slowly but surely. But I do think that Miami has some ways to go. But I'll say this. Miami is getting very, very appealing to a lot of people. And what we're starting to see that's very encouraging to me is that we're starting to see the creation of solid, very high-paying jobs, much of like the jobs that you see in New York City and the jobs you see in Silicon Valley, high-paying tech jobs, high-paying finance jobs. I think we're in inning number 2 for those type of jobs being created in Miami. We have a long way to go, but long-term, I'm very bullish on the fact that Miami, Florida is going to be attracting more of those jobs. Now, the problem, and I think many people in the chat room would agree, the problem with Miami before, and I would say, let's just talk about Florida as a state. Well, maybe not Florida as a state, because New York, many people don't know this, but if you go upstate New York, there's really a very, very few and far between high-paying jobs. Right? I'm not saying you can't get a very high-paying job in upstate New York, but generally speaking, it comes from New York City, Nassau, and Suffolk, right? We produce the most economic output for the state. But going back to my point, sort of piggybacking off of what Steph UH was saying, you know, the problem with Florida before was the income and the job opportunities, just you couldn't even compare it to New York and California, right? But we're starting to see some bigger organizations, some big names in finance, some big names in tech actually start to relocate and provide very high-paying jobs down there, which I think is good. But we still have a long way to go. All right, team, here we are. All right, now just take in the beautiful architecture here at the Dakota. Bree Grams is here. Says happy Monday, everybody. Hope it was excellent. Thank you, Bree. Sam Childers says 90% of inflation is caused by trillions spent by Democrats in Congress. I respectfully disagree with that, but I respect your point as well. I don't think it's one political party that's responsible for the fiscal spending. I think it's both, but I respect your viewpoint on it. All right, now really pay close attention to this, okay? This is probably my favorite thing about the entire building, which is the oil lamps here. We'll wait for the bus to go by. Patricia Ivory says, yes, Tom, but Florida has a long way to go comparing to New York. Yeah, Patricia Ivory, I agree. Check this out. Look at these original oil lamps here outside the Dakota. And I think this is the main entrance where, unfortunately, one of the Beatles members were killed. I think it was right here in this entryway. E. Smith's issue that is getting out of control in Florida is the property insurance. That is another very big issue that needs to be addressed. Now, I pay an arm and a leg for my homeowner's insurance. We'll talk about that in a moment, but I want to give you guys a up-close and personal view of the oil lamps here. It almost looks like you're in an olden movie, doesn't it? And you have the doorman in the original sort of like golden tube there. Really beautiful. Steady C is here. Good to see you. Austin City Limits. Ryan Beck. So I wonder what their gas bill is. I'm sure it is included in the HOA. That's true. You know, Ryan Beck, that's another thing. We were just looking at a piece of property a few minutes ago. $5,000 a month in property taxes. Wonder what the HOA fee is. Now, this is where we came from, all the way down there. 59th Street, Columbus Circle. You actually have a pretty awesome view of the entire Billionaires Row. Hey, Homer Pena, thank you so much for joining and watching the live stream. Thanks for being here. Now, every time we come up here, I always wind up giving an up-close personal shot of these beautiful railings here. And this is the subway entrance here at 72nd Street. You can get the B and the C trains literally right outside the building, which is very nice. And notice all the original wooden shutters too in the windows here. Yeah, Wendy England, you're correct. They are real gas lamps. You are correct. Diane, good to see you. Yeah, very Gothic style architecture. You're correct. Glass 88, welcome. Now look at the moon here. I don't believe it's quite a full moon, but this is Central Park West. And you could see all the way to the east side of Manhattan, and you could see the Upper East Side skyline from here. You could see 432 Park Avenue right in the distance here, the Steinway Building, 157 Central Park Tower, and 220 Central Park South. Audra Henderson says, hey Tom, Happy New Year. Thank you, Audra. Happy New Year to you too. Thanks for joining us on our walk on the Upper West Side of Manhattan. Now notice the railings wrap around the entire building. Such great attention to detail here. All right, let's continue to walk down behind the Dakota. And then maybe we'll take a little bit of a trip through Central Park. This is 73rd Street, so you're going to be able to see some real brilliant original brownstone buildings. I think you guys will enjoy it. Isn't it such a major difference between being in Midtown Manhattan, of where we started off the live stream, and then coming all the way up to the Upper West Side? I love the entryways, the walkways. They're just really, really beautiful. Richard Scott says, is there a mansion tax in Brooklyn as well? I think it's all 5 boroughs in New York City. Hold on one second. Somebody's texting me. Give me a moment. Usually I turn on Do Not Disturb, but now these are my favorite. These big brownstone steps here. Really nice. Look at this gym. Ethan G says Florida is considered the 6th borough of New York City. You're correct. Especially down by Miami, Fort Lauderdale, West Palm Beach. A ton of New Yorkers down there. Specifically a lot of Long Islanders too, if you're from, let's say, Nassau or Suffolk County. All right, let's cross the street here. Now, I do want to touch on one thing, because I had an interesting conversation with a friend of mine, and we were talking about how this market has conditioned a lot of investors into inappropriate habits. So we'll talk about that in a minute, but check out these original brownstones here. Look at how beautiful they are. Wow. These are breathtaking here. You know, I think I take back what I said before about if money wasn't an issue that I would live at 157. I think I would buy an entire brownstone and just live in it myself. I think I would. Just buy an entire brownstone and live in it. So anyway, I was on the phone with one of my friends that runs a small to mid-sized hedge fund. And we were talking about how since 2020 and 2021, right, all of the speculative excess, all of the irrational exuberance that was going on, it's conditioned investors to form and develop inappropriate investing habits. Look at this building. This building is probably set for demolition. I think it looks like it caught fire, unfortunately, doesn't it? You can sort of see the char burn marks here. That's really sad, but I'm confident they're probably going to do a total demo, rip and replace. It's a beautiful building, too. Wow. These are gorgeous homes here on the Upper West Side. It's like a very charming block. Anyway, so here's the reason why I'm saying that. If you guys go to my Twitter handle, I retweeted one of my favorite tweets so far of 2023. I forget his handle, but he posted a chart of the University of Michigan Consumer Sentiment Index. And consumer sentiment and investor sentiment is at all-time record lows. However, if you look at equity fund flows, which means the buying and selling habits of retail, they're not showing their directional biases in their portfolios. Does that make sense? We've actually seen inflows into a lot of these very speculative, high beta, ARK innovative ETFs when everybody is very, very bearish. Right across the street is one of my favorite coffee shops in the world. It is called Black Press Coffee. Unfortunately, I can't walk all the way over there because there's a dead zone literally right here and the stream will drop off. Like there's no cell signal over there for whatever reason. But if you're on the Upper West Side near the Dakota, Columbus Avenue, 72nd Street in between 73rd, go to Black Press. Fantastic. You know what? Actually, we'll try it. We'll try to walk over there. And here's what I think. And I want to know what you guys think. I'm actually more interested selfishly what you guys think as opposed to just hearing myself talk. But here's what I think. I think that 14 years of quantitative easing and the Federal Reserve, or the Powell put, so to speak, I think investors have been conditioned to think that the Federal Reserve is going to bail out the market each and every time without exception. So they're willing to take massive equity drawdowns in their portfolios of 80 to 90%, which they have had done that. I mean, you look at some of these growth stocks that everybody was talking about, like the Pelotons, like the Zooms. These things have been gotten freaking smashed down 90%, and retail has not sold these, right? We could see it. They have not sold it. They're very negative with all the leading economic indicators, the consumer sentiment, but equity fund flows are going into this junk still. Except over the last 2 weeks, JP Morgan Chase put out a report that said last week was the highest selling for retail. I know, Chris Hensley. Yeah, we gotta walk back this way. For whatever reason, this block, it just doesn't have internet service. It's always been like that, by the way. If you have Verizon or T-Mobile, if you try to walk 73rd Street, for whatever reason, there's no service. But anyway, back to what I was saying. Hey, Pup is here. Says, hey, Tom, what's up, Pup? Good to see you. Mike Teeny, what's up, Mike? Now, back to what I was saying is I really think that 14 years of QE has conditioned, right? Because I've always said this. Some people get upset with me for saying this, but human beings are just programmable algorithms, right? Like, think about all of the different habits that you form each and every day over long periods of time. Like me personally, I condition myself to be consistent in running X amount of appointments to close X amount of deals per quarter, right? You condition yourself to get into a habit of doing something. It's the same exact thing. Oh, let me cross the street. Got to look both ways. It's the same exact thing in the investment business, right? You can condition yourself to deploy appropriate risk management, but if every time the market goes down, investors flip out and call for the Federal Reserve to provide liquidity and put a bid in the market, and it happens every single time for 14 years, well, you're going to become conditioned to buy the most high beta, high growth, high speculative stocks in the market and ignore all the fundamental factors of, okay, what is the EPS growth? What is the revenue growth? What is the return on equity? What is the pre-tax and after-tax margins? All of the important factors that you should be looking at. People get lazy. People start to ignore the important things, and they sort of forget that when you're buying a stock, you are actually buying a fractional ownership in that business, and they sort of think that they're just slinging around pieces of paper. And again, the reason why I say that, you guys have to check out this chart. Just go to my Twitter, Walks Wall Street. My good friend, I forget his Twitter handle. I think it's Marlin Capital. He runs a quantitative hedge fund here in Manhattan. Great research. You have to follow his account. He posted, he's like, look, consumer sentiment, University of Michigan, is barreling towards all-time record lows every month. But equity allocation and portfolio positioning would signal that you're in a raging bull market. It's the most bizarre thing in the world. Hey, Melissa 2087, what's up? Says, I just tuned in. Where are we? We are on the Upper West Side of Manhattan. We just did a quick pit stop at the Dakota. And now we are going to head back into Midtown Manhattan, 59th Street, Columbus Circle. TMB, says Tom, bulk of retail investors pay fundamentals no heed. It's all psychology. It's a good point. Audra Henderson, thank you so much. Mary MCQ2 says get off stream and get back on. That's what I did. Oh, for the buffering, yeah. John Batter, good to see you. Says sound is okay here. My good friend, oh my God, Sunshine NYC, what's up? Long time no see. Sunshine NYC, thank you for joining us. YC says I have no sound. I think we should be good now, right? Hold on. Brad says it's already happening. Many wells on the East Coast are now contaminated with salt water as the sea is slowly rising. Street floods much more common now than in 20 years. Interesting. Ladder Daddy 69 says Tom just followed you on Twitter. Good to see you. Looking forward to connecting there. We have a lot of viewers from Algeria tonight. Thank you to all of our friends from Algeria. Hey, photos from around New York. Good to see you. Excuse me. But if you guys have been enjoying the live stream so far tonight, feel free to leave a like on the video and hit the subscribe button if you're new. We do go live about 5 days per week between New York City and Miami and talk about the financial markets starting at 8:30. So feel free to join us here and click the subscribe button. Hey, Destructionist, good to see you. Howdy. Happy 2023. Happy New Year. Good to see you. Teresa Diaz, thank you for the time check. Oh yeah, it's already 10 o'clock because we started late. Apologize for the tardiness. It's unacceptable. Richard Vogel, God bless. Meld says, Tom, I read an article about a software engineer who stole thousands from Zolili by funneling small amounts into his accounts. Interesting. Hey, Paul says, hey, Tom, I discovered your channel right before New Year's, and I've been enjoying your channel ever since. Well, thank you for being here, Paul. I appreciate you. Thanks for joining us on our walks and talks. Much appreciated. Andre Williams says, I did subscribe, but no knowledge. No acknowledgements for Onyx in the city. I don't know what that is. Audrey Henderson says, hey Tom, when are you back in Miami? I was just there. We're actually going to be back next week. I got to check on the house. Wow, look at this, guys. Isn't this a cool view? You have all of these beautiful tree-lined streets here with the holiday decorations still up. That's a really nice street. This is where they film that, what is it, a morning show? Is Live with Kelly and Ryan, is that a morning TV show? I'm gonna assume it is a morning TV show. Yeah, so Joe Driver says, Tom, did you read about the nurses on strike in New York City? Now, I know it's not related to the topics, but I'm curious about it. Is there any people that work in the medical field watching the chat or watching the stream that could provide us with what's going on there? Ooh, look at these dogs. Oosh. Now, what is going on with that nurse strike? Any nurses in the chat? Siva says, hey Tom, any takeaways from private equity firms in 2022? Your thoughts are appreciated. Well, I just think that I think valuations are being compressed. And hold on, let me give you guys a shot of the studio here. Now, Toma Bravo, right? I'm going to give you an example here, and he's actually a very good follow on Twitter. Toma Bravo is a private equity firm that is founded by Orlando Bravo, excuse me. Man, it's getting cold. I got to change up hands here. I got to put my other hand in my pocket. That it was founded by Orlando Bravo, and they did a couple deals last year. I think the most notable deal was Ping Identity. And Ping Identity is an enterprise software company that specializes in cybersecurity, but a very specific type of cybersecurity that is known as IAM Cyber. And that acronym stands for Identity and Access Management. And he always posts on his Twitter, and he's very vocal about this if you watched any of his Bloomberg interviews, that valuations have gotten far, far out of hand in terms of whatever multiple base you're putting on your business, whether that's a price to sales, a price to earnings. And again, as we sort of talk about easy money, quantitative easing, these valuation multiples have just expanded and exploded, right? Where private equity and venture capital has essentially, looked at a lot of these businesses and said, grow your top line as fast and as quickly as possible and don't even worry about profitability. Would we agree with that in a general sense? I think a lot of PE and VC, private equity and venture firms, have been ignoring profitability, but focusing on, let's just freaking drive the top line like crazy. Now that can work in an environment of easy money. But when it comes time where money is not cheap anymore and interest rates start to normalize, which they're doing now, right? Think about this though. I'll pause for a moment. Interest rates, what's the Fed funds rate right now? 4.5, right? In that range, 4.25, 4.5. The real rates are still negative, guys. So I think we need to get to an environment where real rates, I shouldn't say real rates are still negative. Most are still negative. But I think just in general, the focus is going to go back to the basics, back to square one. Focus on profitability. Profits are number one. Okay? As opposed to just, who cares about profitability? We'll spend a bunch of money to essentially buy customers and grow top line. I think that's going to be the material change, in my view. Billy says, Tom, does consumer sentiment and buying power mean a little less compared to previous decades due to technology and the way companies and banks can make money in other intricate ways? Billy, to be quite honest, I'm not sure if I understand the question too much. Christine says, Minnesota just had long negotiations and strike and got a record contract to ensure nurse retention in the field, safe staffing, and involvement in staffing. New York nurses are striking for the same. I got to read up on that. Fairway says nurses should join the Teamsters and shut down the hospitals. I don't know about that. I got to read up on it because it's dangerous, I think. I don't know. I have been seeing it though. I have been seeing it. There was actually some videos on Twitter of some of the nurse strikes. A lot of good coverage there. But honestly, I just don't know too much about it. I want to learn a little bit more about it, but I'm just trying to sift through the comments here. GGNYC says we're very low on staff. We need more nurses. Dan Zhang, the thought of anything, right? VC or private equity is you want to acquire a company where you feel that you could add value and boost the valuation, right? So if I see a company, for example, that is maybe trading at a discount, or I perceive to be a discount, and maybe I disagree with what management is doing, maybe I disagree with what the board is doing or whatnot. We have differing opinions on the strategy of how the business of the company can improve operations. Maybe a private equity firm or a VC firm will be able to come in here. These things are so cool, these one wheels. We'll be able to come in there, purchase the business or a stake in the business at a low valuation, or purchase the business outright, and then try to increase the operational efficiencies to boost the value, the overall value of the business, and then hopefully one day sell it or take it public and cash out again, right? At much higher valuations after they have done either a whole rip and replace, hired new CEO, management, improve the operations of the business, increase profits, grow the business. That is one major way. Hey, Tom Alves is here. This is Hey from Brazil. Good to see you, Tom. Thanks for joining us. We are now back at Columbus Circle. Now, many people don't know this, but directly below us, there's actually an NYPD precinct right here at the Columbus Circle subway station. Let's see if the kitchen is still open here at... No, I think it's 10 o'clock, so it's closed, but you can kind of see into the kitchen. Oh, Dan Zhang, absolutely, yes. Yeah, and it's so like if you're a venture capitalist, right? The odds, some of these bets are far cry bets, right? You're betting on founders that may have a really good track record or may not have a good track record. These are really, really very riskier bets, but at the end of the day, the payoff could be ridiculous. Here's the main subway terminal here at 59th Street, Columbus Circle. If you go right down here, make a left, you'll actually go to the main precinct. Hey, Christine Brown says, by the way, Tom, love your video blog. Love the financial discussions and the amazing tours. I've been telling my doctor and nurse friends about it. Hope you keep prospering. Hey, thank you so much. We appreciate you being here, and thank you for doing all the great work you do in the medical field. I know it is definitely hasn't been easy this past couple of years for obvious reasons, so I think I speak for the rest of the chat when I say thank you so much for all of your great work. All right, let's cross over here by the Deutsche Bank Tower. I was going to go in and show you guys the inside, but I think they just closed. I think they close at 10 o'clock. We'll see. Whoa, look at this. What are they doing here? Oh, maybe they're taking down the big holiday stars that used to be hanging from the ceiling. Now, the Whole Foods is in the basement here. Maybe they're filming something. Looks like they're filming something. Doesn't it? Photos around New York, so they are taking down the stars. Maybe they are, but I would see them on the ground. I think they're actually maybe setting up a studio to film something overnight. Doesn't it look that way? This kind of looks cool. Hey, Diego Rosas says I was in New York City yesterday. I'm now back in Florida. Love that. What part of Florida? Wow, these are really good shots of Central Park Tower and 220 Central Park South. Fantastic. Speaking of Williams-Sonoma, didn't they report earnings not too long ago? Speaking of earnings, everybody, not only this week are we going to get inflation data out, CPI, but we're starting Q4 earnings for the major Wall Street mega banks, which, as you know, we could use that as a proxy to see how the health of the U.S. consumer is. Now, I'm really looking forward to JP Morgan Chase, because they are a massive, massive credit card issuer, and I always like to see the delinquency rates. check that out. Right here is the beautiful full moon. Dan Zhang, is it true in the case? Yeah, it is. You know, many of their, if you work at a VC firm, many bets don't pan out, right? But the theory is, you know, if you get in on the ground floor of one of these companies at a crazy low valuation, and what if it's the next Uber? What if it's the next Amazon or Facebook? You're talking about ridiculous returns. You're 100% right. Michael Joseph says, you are right, Tom. The wood is for dolly tracks. I used to work in the film industry. Looks like a remote jib and dolly being set up. That's kind of cool. It looks like, you know, you never know. There may be like a private filming in the Deutsche Bank Tower for like an HBO show or something. That's kind of cool. Now, I think I've said this 1,000 times, but I used to live in this building right here, but in a closet, in my brother's friend's closet. It was a 4-bedroom apartment, and I lived in one of the walk-in closets in the hallway because I didn't want to blow a lot of money on rent. Susanna Q Force, Tom William, Sonoma is closing many stores and also the Banana Republic. Yeah, and you know, it's interesting because sometimes, to your point, I use stocks as leading indicators in and of themselves. So think about William Sonoma and think about Wayfair. I think Wayfair trades under the ticker symbol W. Now, ever since interest rates started to go up, and ever since we've been very, very paying close attention to home sales, right? Existing home sales and new home sales, these have been absolutely falling off a cliff and drying up here. Well, if nobody's buying homes anymore, I shouldn't say nobody, but if you have the transaction volume of homes declining, well, maybe you could use that as a trade idea to go short maybe a lot of the furniture stocks. Now, I mean, that trade is long gone, right? But, you know, take a look. Take a look at Wayfair. You know, I think that's a company that announced some major layoffs because they grew way too fast during the pandemic. This is 3 Columbus Circle. Wayfair grew way too fast during the pandemic. They had to hire so many people to process orders and transactions. And then, you know, normally they have to lay people off because the Federal Reserve pretty much killed the housing market. Okay, we are back, folks. 57th Street, Broadway. Looks like some type of, what is that, a husky over there across the street? Wow, it looks like an albino husky. TC says, how much was it to rent the closet? I think I threw him like $250. I think either $250 or I forget, maybe $250, $350, something like that. Yeah, PLA 30 makes a good point. It says William, Sonoma, and Pottery Barn are the same company and they tend to cater towards higher net worth individuals. That is very true, right? You know, you're totally correct. You know, if I definitely didn't furnish my house with William Sonoma furniture. I can guarantee you that. You know, some people spend hundreds of thousands of dollars on furniture. Insane. TC says, love it, house hacking before it was cool. You know what, TC? You are 100% spot on. Love these 2 dogs that we're about to pass. Now, I'll give some, I don't want to say advice, but house hacking. Ooh, before I take you guys into Times Square, I want to show you the beautiful Carnegie Hall. You know, I always talk about delaying instant gratification. You know, if you can delay instant gratification, you're going to be so set in life. And house hacking is a really good way for young people to acquire assets, right? As I talk about real estate. So let's say if you have you're looking at a deal, you're looking at a duplex or a triplex or even a single family home, right? Maybe it's a 3 or 4 bedroom single family home. And you put the down payment down, you buy the piece of property, but then you look for tenants. You look for roommates to rent out the individual rooms. So if you live in a 4-bedroom house, right, and you're in your mid to early 20s or even late 20s, what I would do is I would buy the piece of property and rent out the individual rooms. Yeah, it's going to be a little bit inconvenient to live with roommates, but in 3 to 5 years, if you continue to make double payments on the property, right? So pretend like you don't live with roommates, pay your mortgage as you would, but use the rent that you're making from the tenants to make another payment on the mortgage. You could build some serious equity in your property very, very fast, then move out of that house, rent out all 4 rooms, and the property is going to cash flow really, really nicely. Now, again, is it a little bit difficult to do? Yeah, you need to delay your instant gratification, but you'd be surprised with how much of a head start you can get by just doing the simple things and delaying your instant gratification. You could build significant equity in your property from other people's money. It's a really, really good idea. The short guys is all good idea except pretend you don't have roommates. Yeah. Hey, Joan K, what's up? Yeah, TCs is definitely need to do when young before having a family. I'm telling you guys because it's not like I'm old, right? But I'm getting older. I'm getting to be an older individual here. This year in 2023, I'm going to be turning 18. I mean, oh my God, 18. 28. Can you believe that? Turning 18. Jeez, I wish. No, but I'm going to be turning 28, and I can tell you, it feels the same as when I was 21. So if you delay the instant gratification, if you live in these crazy conditions when you're young, you're not even going to remember it when you're older. But it's going to put you so far ahead, you're going to thank yourself that you did it. So just inconvenience yourself as much as possible when you're young. That is like my biggest staple. Inconvenience yourself as much as possible when you're young. And when you're older, dude, you're going to be freaking sailing. All right, Barclays Investment Bank, as we know, very famous building, I should say, because that was the old Lehman Brothers before the major collapse. Now, chances are if you've seen any documentaries about the great financial crisis with all of the news reporters, the New York Times, Wall Street Journal, Washington Post, CNBC, interviewing bankers and taking pictures of them holding cardboard boxes. It was right here, right? This was the location of Lehman Brothers. And part of the deal is that the British bank, Barclays, would take over the real estate here. Maybe we'll take a walk down past it, but a lot of Wall Street history right here. This is quite literally the location where Lehman Brothers collapsed. Dan Zhang. You know, Dan, I'm gonna say something, right? And I hate to sort of come off as like a preacher, but guys, I was watching the most crazy video on Twitter. I know I always say Twitter, but that's the only social media platform I use because I think that's where it's the only social media platform besides YouTube that doesn't suck value out of its users. It actually gives value. Now, let's put this into perspective, okay? For anybody who is living in a Western country, like the United States and Canada, you get the picture, right? A generally free country. Let me just wait for the light here because we have some traffic. So long story short, I was watching this really honestly heartbreaking video on Twitter. And all right, I'm going to walk behind this guy. I don't trust this guy. So I was watching this video, right? And once I hang up, I got to post this video. This is BNP Paribas. This is actually a French investment bank. And a helicopter crashed right here not too long ago. I remember I was working in Midtown the same day that happened. It was wild. Our building was actually evacuated. All right, anyway, enough distractions. So the video is this. It was shot in southern Florida. I think Miami. I'm not sure, but let's just go with Miami. And it was a raft. Like, guys, this was a makeshift little dinky, like dinghy thing, okay? And it shows the raft coming ashore, I think across this like major highway. And you just see tons of immigrants pouring off this raft with looking all disheveled, looking so dehydrated, emaciated, and their clothes are like ripped to shreds, okay? And the moment when they're walking on shore, like it seems as if like all of their troubles have just literally melted away from them. They're hugging each other, they're jumping up and down. It's like they won $20 billion. And the reality is they didn't win $20 billion. These people are probably so poor, but they just have maybe a shot of opportunity just to be in the United States of America. Now, for somebody like me, I didn't have to do that. I didn't have to get on a little buoy, risk my life, crossing the ocean and probably storms, you know, with no money in my pocket to try to come to the United States to try to maybe have an opportunity. I was just given it because I was born here, right? So I think to put things into perspective, if you're born in a relatively Western nation, specifically the United States, I mean, you should be waking up with a freaking fire in your belly every day, like ready to go, because there's thousands, I would say millions of people all over the world who would do something as crazy as get in a little raft that's probably gonna sink and you're gonna drown, just to have the shot of maybe making it to shore and not getting deported. So you gotta be, if you're born in the United States, Canada, anywhere, you gotta be ready to rock at all times, because there's millions of people who would literally kill to take your spot, and you got the spot for free. You didn't have to do anything. It's just that you got so lucky to have, you know, been born in the US. So anytime I'm having a shit day at work and it's horrible, you know, I'm not making any money, I'm not closing deals, the economy's in a downturn, just know that you're so ridiculously at such an advantage of everybody else where you can't squander it. You gotta just freaking go at it every day, regardless of how you feel. So I don't know, that's what I would say. All right, here we have it. Big famous building here. 745 7th Avenue. Barclays Investment Bank. This is the old Lehman Brothers. It's kind of crazy to think about that day when Lehman Brothers collapsed in September. that really changed the way not only the United States economy operates, but the global economy. It was a global financial crisis. It was a global recession, and it kicked off a new paradigm in financial markets. It kicked off a new paradigm in monetary policy. And we have been in a monetary policy experiment, literally an experiment for 14 years. And we are now just trying to unwind that experiment, which is kind of crazy. Rates are going up. Hey, PLA's 30, what's up? Good to see you. Sunny 3156. This is in 2008, you're right. Hold on, I gotta put you guys down. I think my battery's gonna die. Give me one moment. All right, I think we're good. You know, we can't even walk this way. You know why? There's a big dead zone there. It's gonna buffer. We gotta go the other way. So we'll go walk past the Lehman Brothers again. Hey, TC, this is Tom. I talked to a banker in 2004 regarding interest-only loans and was told then the government would eventually have to bail everybody out. Wow. That's crazy prediction, man. Bang on prediction, by the way. Yeah, and that's exactly what happened. We did have to bail everybody out. Hey, Daryl's here. Says, hey, it's on from Chicago. What's up, Daryl? You know, Daryl, I may be in Chicago in March. I'm actually really excited about it because that will be my first time in Chicago ever. Never been. All right, let's cross. Somebody said in the chat there's a big event going on in Times Square. I don't see too many people. It kind of looks empty. Now, here's what I'm just going to do a quick prediction for Q4 earnings as it relates to the financials. I think Wells Fargo, Goldman Sachs are, in my view, right, and I could be wrong, I think are going to have the toughest go about it. And here's why I say that. Goldman Sachs is a phenomenal institution, like A-grade institution. However, in this environment, deal flow is down significantly, right? And Goldman Sachs makes much of their bread and butter. Here's Morgan Stanley, by the way, another big bank. Makes a lot of their money from fees, equity underwriting fees, taking companies public, big mergers and acquisitions. And I think a lot of M&A activity is going to pick up in Q3 of this year. So they don't have exposure to retail banking. They have a little bit of exposure to retail banking through Marcus by Goldman Sachs. And Marcus by Goldman Sachs was pretty much a failure, right? And I'm not saying that to be mean, but you know, let's just call it for what it is. It just didn't work out, and that's fine. Here's why I think Wells Fargo is also going to take it on the chin a little bit, because Wells Fargo has the largest exposure in the mortgage market, and mortgage originations I think are going to be down significantly. Also, the refinance market has essentially gone to zero, right? You know, why would anybody refinance their mortgage when Fed funds rate is going to 5%, the 10-year US Treasury yield's 3.5%, and the vast majority of people who bought a home over the past 14 years probably have less than a 5% rate. So I think all of those factors are going to weigh on bank earnings. Where I think you may have a bright spot is in the sales and trading departments, capitalizing on a lot of the volatility. Because usually, look, at a proprietary, if you work as a proprietary trader at a major bank, right, you need volatility to make money, right? Increased vol is good for traders. So I think that's going to be a bright spot in the bank's earnings. I think mortgage originations and refinances are going to be down big time. But I don't know. What do you guys think about that? That is my expectations for Q4 earnings. All right, it doesn't look like much is going on in Times Square. Billy, this is one trivial thing. Banks like Wells Fargo, Capital One, etc., not embracing gambling and making it very difficult for customers to gamble. I think it actually hurts them in comparison to banks like Chase. Are you talking about like online gambling? I didn't even know that. Thank you for sharing that. So Billy, is that in relation to like online gambling? I don't get it. Hey, FredX, what's up, man? Good to see you. Hope you're well. Mike sees this as impossible to have M&A without cheap money. Yeah, it is. Now, I think, a lot of very well-capitalized firms and businesses are going to benefit the most in this economic decline. Because think about all of those companies, right, who have done the right thing, who have made sure their balance sheet is strong and have ample amounts of cash. They're going to be able to buy businesses for pennies on the dollar because we are in an environment of multiple compression, PE compression. So valuations are coming down very, very steeply and steadily. It's been a steadfast valuation decline. And companies who are very well capitalized are going to be on the hunt to pick up a lot of these businesses that are badly beaten up for pennies on the dollar. I don't know, what are your thoughts about that? Oh, Wendy England's is Citibank as well. You're right. I think Citi reports on Friday too. TC says Tom, mortgages and refis will definitely nosedive. Well, here we have it. This is the main ball that they dropped on New Year's Eve. This is also the H&M building. But if you guys are enjoying the live stream so far tonight, please feel free to leave a like on the video. Also, hit the subscribe button if you're new. We go live at 8:30 p.m. Eastern Time between New York City and Miami. See, you could also see the confetti on the ground. There's still a piece of confetti from the ball drop almost over a week ago now. Yeah, Zozo Bob says Wells Fargo had to pay a $3 billion fine for screwing their customers. Now, what was that in relation to, Zozo Bob? Was that the same scandal when they were opening customer accounts without their permission? Or did they do something else now? I wouldn't be surprised if they did something else. Meld says, Tom, did you ever get your confetti? I did. I got a piece. I saw the CD guys. I got to avoid them. I would rather buy a high beta growth stock that is down 90% than have an interaction with the CD guys. FredX says, I heard some dog acknowledgements. Yes. Thank you, FredX. Oh, Billy says, yes, Tom, it is sports betting. You can't use debit cards to gamble on things like sports betting, lottery, etc. I actually think that's I'd actually give them 2 thumbs up for that. I respect that very much, because a lot of banks are only about, just fleece the customer no matter what. But I actually agree with that. I do not, because a lot of these gambling sites are very predatory in nature, in my opinion. I'm not a fan of the online gambling. They are very, very predatory in nature. And we actually talked about this before as it relates to a lot of these gambling companies now going after college students, which is crazy. There's been partnerships with online casinos. Ooh, that guy took a big spill on the skateboard. Partnerships with online casinos in colleges, which is beyond me. Let's check out these skateboard guys. I want to see what they got. Some of these guys are really good. Let me get out of their way. Oh, look at this guy. We'll see if they can land something. Very seedy, Mike C. Very, very seedy. Mike Choi says we should pay people to move to rural areas. Well, I think some states are actually kind of doing that. There's been massive amounts of incentives for remote workers to move to other states. Wow, this guy's good. That guy was really good. Mr. W says do a kickflip, yeah. Carpet says, when will there be snowfall in New York? I'm not sure, and it's been really strange because we've had the weather for it. We've had the weather where it's freezing. We had about a week where it was 8 degrees out. It was probably some of the coldest temperatures ever. And it was cold for no reason. We didn't even have any snow. Ren 10 says, Tom, what banks are going to have? Well, usually banks like Morgan Stanley, Goldman Sachs, JP Morgan Chase. Goldman Sachs probably has one of the best trading desks on the street. Here's the NASDAQ. This is where they shoot Squawk Box. Let's try to get a closer look inside. Kind of cool. Oh, I see Texas Instruments over there. Baidu, Chinese company. Dropbox, T-Mobile, Microsoft, PepsiCo. Broadcom, the Trade Web, Starbucks. We talked about Starbucks last night. Starbucks is actually trading near 52-week highs. All right, team, we are now 42nd Street. Ha, yeah, photos. Oh my God, photos from around New York. You remember those things? What were they called? The T95 calculators? I think I still have mine. TR82, I think, something like that. Those graphing calculators. Oh my God, dude, what a throwback. Michael Joseph says, Tom, Goldman Sachs took away our coffee. I heard about that, I read that. So what happened with that, Michael? So when you go to the office, you're not allowed to, you have to pay like $2 for the coffee now, when it was free? Now, speaking about layoffs, okay, I think we shouldn't get too overly biased here. This is BMO Capital Markets. I believe this is Canadian. Now, Goldman Sachs has announced about, I think today, they're laying off about 3,600 people. And the media released some articles about it late last night. But here's the thing, okay? To be fair, I always try to see both sides of the story. You know, I have a lot of friends in banking, and usually they do normal rounds of layoffs in the first quarter of the new year, right? To weed out all of the underperforming bankers. So I don't think this is like an anomaly. I think this is normal downsizing, but this round of layoffs could be in addition to the 8,000 employees that they've announced will be laying off. I don't know if it's in addition to, or I don't know if it's including. That's what I'll say. Because there's usually just normal layoffs in Q1 of every year. This is Bank of America Tower. I think their global trading headquarters is right here as well. Bank of America will be up on the earnings block as well. Yeah, Ryan Iglesias, is nice to see BMO there. Oh my gosh, guys, hold on. Okay, hold on. Okay, this is about to be what I call a rip your face off view. You ready? Look at the color scheme on the Empire. This is big stuff. Look at how beautiful that is. Now, I don't know why the Empire is lit up in red and white tonight, but it looks really unique, doesn't it? Salesforce is another company that announced they're laying off about 10% of their workforce as well. Anybody can Google why the Empire State Building is red and white today? Anybody know? It's a nice shot. It's a really good view. And obviously this is Bryant Park. Now it just changed back to the original classic white colors. Oh, is it really in honor of emergency workers? Nice. Oh, college football playoffs. Interesting. Did not know that. Georgia Bulldogs won, so maybe that. It's a really nice shot from here. Okay, I'll take you guys back to 57th Street. I have to head back to the office and get all my stuff and get ready for the day tomorrow. Here's the Steinway & Sons building with all the very nice pianos. Michael Joseph's Red Cross, Gary Carpenter, welcome. Sisters Surround. This is Tom, Georgia Bulldogs win college football playoffs equals red-white color scheme. Well, congratulations to the Georgia Bulldogs. That's fantastic. Now, since we're well into Walks on Wall Street after hours territory, so once we go over 2 hours, the stream tends to go off the rails. So I have a question for all of our football fans. How does college football work? And I'll sort of clarify what I mean. Because there's like a billion different playoff games. Like a billion different bowl games. Like this bowl, that bowl, that bowl. Like how do we know who's like the top team that wins everything? That's the only thing I never understood. Like what's the different tiers? Like first place, second place, third place. It just seems as if There's this bowl. I think we saw Syracuse University was playing in some other bowl, like the Pinstripe Bowl. I don't understand it. I don't get it. This is D.E. Shaw is in this building. Quantitative firm.
And in 2030,
hold on. Oh, my chat is behind. Sorry about that. Hey, Zada, thank you so much. Hey, War Walker, good to see you. Thanks for joining. Take a look at 30 Rock here. Mike C says nothing beats NCAA basketball playoffs. I do follow that. March Madness is very fun. I always fill out my brackets every year. I love that, March Madness. Even though I'm not a big basketball fan, I always fill out the March Madness for sure. I love it. The short guy says March Madness is the best. I agree. It's fantastic. I find college basketball much more exciting than professional. I can't even watch the NBA. Is it just me, or anytime you watch an NBA game, they took down the Christmas tree here at News Corp. They must have just taken it down. But anytime I watch the NBA, it almost seems like everybody is too good, that it seems like they're not trying hard. So it's not exciting. But in college, like, these kids are busting their backs, right? To try to get playing time, to try to stand out. They're taking more risks. But the interesting thing is with the NBA, I think everybody's so good that it makes it boring. Daniel says, I couldn't agree more. It feels like they're not trying. It feels like these people just aren't, it's like they're not trying. They throw it up, it goes in. They throw it up, it goes in. Dusty Cole says the NBA has changed a ton to increase scoring, decrease physicality. Yeah, it just seems like, I don't know, it seems like college is better. The Garlic says they stopped playing hard. I don't know, it just feels it's more exciting. I don't know why. Dan Zhang says, Tom, you need to watch UFC live fights. Most exciting sport ever. I really, you know what I want to do, Dan? I want to go to see a UFC fight in person. That's my goal for 2023. I agree, it's crazy. Like, I give so much respect to those people who essentially go out there and get the crap beaten out of them every day. Now, I heard, speaking of the UFC, there was horrible news coming out of the UFC. Absolute heartbreaking news. Like, when I read it, I literally got sick. I think there was an 18 or 19-year-old fighter, female fighter. I didn't know who she was, but I was reading about her, and supposedly she was going to be the best female fighter ever. Like, she was a prodigy, they were calling her. And I guess she just passed away over the weekend, which is so horrible. Yes, Dusty Cole, you're correct. Victoria Lee, yes. It's bizarre, man. Crazy. 18 years old. It's tragedy. Tragedy, man. Paul Medis, what's up? Good to see you. Michael Joseph has died. No, we don't know the cause, but I think her sister posted something about it on the internet, letting everybody know. But I don't know the cause. I don't think it matters. But it's just horrible, man. It's really terrible. Hey, Miami, we'll be there next week. I cannot wait to wake up and see the sun. I honestly can't wait. Wake up, it's 80 degrees outside, the palm trees. Man, I can't wait. I'm excited. I think you guys are gonna like it too. There's how many hours of sleep do you get every day, Tom? Sleep is very important, very optimal. I try to get 7 to 8 hours. I always try to get 7 to 8 hours, but I will say this about sleep. Without fail, anytime I feel as if my mood is a little bit off, like I'm cranky and I have like a lot of brain fog, almost 100% of the time, it's when I'm not sleeping properly. So I have a rule. If I have a big decision to make, I never make the decision when I'm tired. If it's like a very, very big decision where it's going to impact my life in a big way, I make sure I get at least 8 to 10 hours of sleep the night before I make the decision, because you're going to have much better mental clarity. If you're running around gassed and exhausted all the time, it's going to impact your performance. And you know, there's a lot of people, I would consider them almost like charlatan in a way. Oh, let me show you BNP Paribas. This is the French investment bank that say, oh, you shouldn't be sleeping. You could sleep when you're dead. Sleep is for the weak. Dude, you got to go to sleep, okay? Sleep is the most important thing for you to be able to perform optimally as a professional. Like, I never understood that argument of people saying, you don't need to sleep, you can run on like 2 hours of sleep. No, you gotta go to sleep. Like, maybe if you are, you know, a teenager or in your early 20s, but once you reach your mid 20s, you have to get 7, 8 hours of sleep. You have to, or you are just not gonna perform and you're not gonna make good decisions. Wow, look at the Sheraton, New York. Beautiful, isn't it? I don't think you've ever seen this before, have we? Wow. Feels like spring. I'm surprised that they have that up. That's usually like something that these hotels do during the springtime. Troy Atman's is the fake flowers. They kind of look real. They look like real flowers. Matthew M says, Tom, does your AC run during the winter? When I'm there, I never have it on. When I'm there in the winter, I never have the AC on. I open all the windows in the house, and I love the breeze blowing through the house. But I think the Airbnb guests turn it on. But I think it's because in the winter it's so cold that when I'm down there, it's not like I'm sick of the warmth, if that makes sense. Very, very seldom do I turn the AC on. I'm trying to think of the name of this podcast that was all about optimal sleep. Maybe I'll post it on Twitter once I stop streaming. But it was arguably one of the greatest podcasts I ever listened to, and it's all about how important sleep is, how to get optimal sleep. It's really good. Whoa, Zozo Bob says Miami is having cool weather now. It's 58 degrees in Florida. Whoa. Well, I'm sure during the day though, Zozo Bob, it's probably warm, right? AMB0123 says, Tom, will you take us on a tour of the Aston Martin building when it opens up? It's a good question. Now, I think you guys are going to really enjoy what we have in store this year. We are going to be doing some very, very fun and cool things on the channel. I'll just say that. So a lot of cool things are coming, and I'm very excited about it. And I would say stay tuned. Now, I think the Aston Martin building is all sold out. I think. Zozo Bob, could we confirm that? I think it's like 98% sold out. It's an amazing piece of real estate. It really is. And I think it's almost all sold out. Okay, here we are outside of Carnegie Hall. Now, I want to thank everybody for joining us tonight on Walks from Wall Street. We had some amazing conversations about monetary policy, about fiscal policy, about tomorrow when Fed Chairman Jerome Powell will be speaking. We also had a conversation about Thursday when we are getting the CPI numbers out. And last but not least, we did a quick, abbreviated conversation about Friday. And Friday is the official start of Q4 earnings for the major investment banks. So if you guys are enjoying the live stream and enjoyed the stream tonight, feel free to subscribe to our channel. Join us here tomorrow night at 8:30 p.m. Eastern, and we will see you guys in the next one. So Joan K., Richard Vogel, thank you so much. Henrique, Abdullah, Law, Gary Carpenter, Joan, Zozo Bob, Quay Star, thank you. John Batter, appreciate it. The Short Guy, The Mighty Bull, EBITDA, Wendy England, BJ Taylor, Steph UH, Gigi NYC, Sabrina Fair, Joseph Hardaway, Dr. Longas, Cayenne Pacific, Blue Cat 831, thank you. There, thank you so much. Austin City Limits. And to the Mighty Bull, have a good night wherever you are, because there is always a bull market somewhere. You just need to know where to look. Razzle Dazzle 786. Welcome to New York City. Hopefully you're enjoying your time in New York. God bless everybody. And let's regroup tomorrow. What do you say? Enjoy your Tuesday. I'll see you later.